Welcome to the channel. Today we'll be looking at my gaming and esports watch list, analyzing their stock and breaking down their business model. This should be even more exciting if you're a gamer, as I'll be talking about the companies behind some of the biggest titles, like Call of Duty, Overwatch, Fortnite, and GTA. Fact is, there's just a lot of gaming companies out there, and it's important to be aware of which ones are going to keep growing to become big enough and set decades-long gaming trends. That's where I think gaming is going to excel even more once technology improves further. Based on my personal research, I'm interested in international gaming growth, esports leagues, and the popularity in fantasy sports. I'd appreciate if you could drop me a quick like. It only takes a couple seconds and it would really help my channel out a lot. I want to keep making content that's enjoyable and easy to understand at the same time, so let's get into the fun stuff. The first company I'm watching is Activision Blizzard, ticker symbol ATVI. It's made of three main branches: Activision Publishing, which manages designers in developing the games, Blizzard doing the same thing while also managing Major League Gaming, and King Entertainment handling the mobile game side of the production. For those of you that know, Activision Publishing is best known for creating the Call of Duty series, from which Warzone right now is really popular, especially because of its unique Battle Royale gameplay. It's free to download, but then monetized with microtransactions such as battle passes for ranked tiers and extra points. COD Mobile is the brand's entry into the mobile gaming market, hitting 100 million downloads the first week of release, with a similar monetization strategy. Blizzard Entertainment was the most important merger for the company because of its assets. It's the developer behind series like Overwatch, which has 50 million players, World of Warcraft, which has been around since the early 2000s, and popular action RPG series Diablo. King Entertainment's Candy Crush was one of the most downloaded mobile games at one point, and it's still pretty popular right now, sitting at 5th place. The studio has created similarly branded games, all which focus on puzzles and strategy. Overall, the game still has 200 million monthly active players, which is a lot in today's day and age. Acquired in 2016, Major League Gaming is the foundation for professional esports tournaments nationwide. With a huge fan base, it's primed for growth, especially in streaming with Google's YouTube as an exclusive partner. Each of Activision Blizzard's business segments have a key focus, and it provides diversification in the company being a developer, producer, and an event host for gaming. With increasing popularity in this industry, I believe the company stays dominant in the long term for their unique brands and investments. A quick look at the financials, we can see it has a modest trading range between $50 to $70. This is a market cap of $52 billion, around the same valuation as Nintendo, which, taken into perspective, is a console maker as a whole. Activision Blizzard is also worth much higher than EA Sports, which is valued at $33.7 billion. Considering that Activision is more than just a developer and actually owns the league behind esports, I think their market value is primed to grow, and so does the PE ratio at 34.30 hint for higher anticipation of expected earnings growth. The outstanding shares at 769.2 million, I consider a bargain in getting more value for your shares. Investing in companies like Microsoft and Sony is great for partial revenue due to their growth in console gaming, but if you want to focus on the ideation of the actual games that are needed to play, then your best bet is investing with the developers' minds behind them. This leads me to my next company making the biggest moves, especially in silence. Tencent, ticker symbol TCEHY, is a tech giant that started out as a messaging services company, but quietly started shifting to strategic investments in the entertainment space, such as cinema, music, streaming, and e-commerce as well. Today they are the world's largest video game company by valuation. The business model is huge. Tencent Games oversees game development not just in the Chinese market but internationally as well. Their digital advertising business is combined with their social networking platforms, which connects marketers and consumers together. WeChat is the third biggest messaging service behind WhatsApp and Facebook Messenger. It has over 1 billion in users, and it's very advanced for things like handling payments, booking flights and hotels, and accessing ride-sharing services through one single app. Tencent's entry in cloud was influenced by the profitability and international market growth. While its market share is much smaller than international leaders like Amazon and Microsoft, Tencent is using a strategy to focus on local markets and specialize in niches. For example, they're ramping up market share in Japan's countrywide cloud migration for many businesses, as well as providing services for smaller gaming companies that look for help from the tech giants. Gaming is the biggest market potential for Tencent, as they're a major investor in many studios alongside their in-house brand. Companies like Shark Mob, Grinding Gear Games, and Riot Games are 100% owned. The most profitable has been Riot Games, known for their popular League of Legends series, and some of their fans are also highly anticipating the upcoming tactical FPS game, Valorant, which is scheduled for release this summer. Epic Games is the studio behind Fortnite, and Tencent has a 40% stake. Yes, the same Fortnite that hosted a virtual Travis Scott concert. I don't play Fortnite as much now, but I gotta admit that was pretty dope. Fortnite is seriously not a joke when it comes to being extremely profitable and maintaining a consistent fan base, especially among younger demographics. There's a reason why Tencent invested 40% in them, because they want to see the creativity of what's the next successful hit after Fortnite. Every game has the potential of dying out, but it's up to the developers to create something even more innovative and successful after it. Tencent is scheduled to become Bluehole Studios' second largest shareholder, the company behind the first ever Battle Royale game to be mainstream, PlayerUnknown's Battlegrounds, also known as PUBG. Although its popularity has decreased because of competition with games like Fortnite, PUBG is still doing pretty well, around 50 million daily active users. Tencent also has a small ownership in rival developers as well. 5% Activision Blizzard, the company I mentioned before, and another 5% in Ubisoft, which is a developer behind series like Far Cry, Just Dance, and Assassin's Creed. You're probably wondering now, hold up, why are their hands tied everywhere, with equity in all the developers behind competing games like Call of Duty's Warzone, Riot Games' PUBG, and Epic Games' Fortnite? Well, the answer is simple. Tencent has diversified its free cash flow so well among different developers that their biggest competitor is essentially themselves. Think about it, with how complicated it is to do business in China, one of the largest economies rivaling the US. Tencent is in their founding country, being able to access worldwide sales, while monetizing those foreign companies that are wanting to get publishing rights access through Tencent's distribution to the Chinese market. With difficult barriers to entry, Tencent negotiates royalty or ownership terms for foreign developers, petitions, and then adds those games to their personal network of millions in their sales pipeline. Insane, I know. But that's what a company does to maximize revenue potential in any way possible. Tencent has privately invested in Reddit and Discord as well, examples of how different they scope key areas of the gaming experience, like communication tools and community building. It really shows that they don't shy away from any type of investment opportunity. There's a reason why they have many acquisitions, and we can see that based on their financials. Tencent has been trading in the $40 to $50 range, and it hasn't been as volatile as other stocks on the market. This might be due to the fact that they have 9.55 billion shares, which is pretty high for outstanding shares, so it would be interesting to see if they do any stock buybacks or reverse splits in the future. Still, with all those shares out there, Tencent is sitting at a market cap of an astonishing $511 billion, only under halfway from a $1 trillion valuation if they can continue the same growth and lead in gaming market share. I wanted to note that they do offer a small dividend yield, but it's probably not as high as what dividend investors are looking for. Still, this is an awesome fact for growth investors because this means Tencent reserves their cash flow, and they're only saving it for strategic acquisitions and things that can strengthen their market value. The third company on my watch list is DraftKings, which actually just started recently trading under the ticker symbol DKNG. During a time of no sports right now, the IPO choice was questionable by many analysts. But I think DraftKings is preparing for the upcoming return to many sports seasons that have been put on hold, as fan anticipation has increased to a level never seen before. DraftKings' business model is split into fantasy league hosting alongside sports and esports betting. Competing with FanDuel, they are the biggest leaders in a few states where sports betting has now been legalized. As more states continue to lift restrictions, this opens opportunity for early emerging companies that have entered this market, which can expand to billions of dollars because of popular leagues like NFL, NBA, MLB, MMA. Esports fantasy teams are growing in popularity too, for those that want to opt for their favorite pro gamers instead. It's interesting to see how much game data is collected for live sporting events and digital tournaments, showcasing the capability of the company to provide personalized services for extreme sports enthusiasts. Their more new service includes online casino games, capitalizing on the fact that physical casinos are closed currently, while their games are still to be appealing to certain demographics that enjoy betting in other ways besides sports. DraftKings financials are very new, and it's always hard to tell with IPOs how they'll perform for the next couple years after listing. But I'm a growth investor, and I personally think share prices trading in a range to $18 to $21 may seem attractive, considering the total market cap of the company is just shy of $1 billion, relatively small for an industry projected to grow by a lot. That's why the PE ratio is extremely high, as more trading is focused on future momentum rather than their current financial fundamentals. Total shares outstanding is around 313 million, meaning you get more of the company pie if you invest now in the initial IPO stages. Honorable mentions that didn't make my watch list include VanEck Gaming ETF, Nvidia, AMD, and Take-Two Interactive. All great companies in the gaming industry, but at prices too overvalued for me to buy right now, so I'll be watching them later on to see if there's a market correction that comes. VanEck Gaming ETF is really diverse and meant for anyone that wants to just safely invest in gaming in general. The company pools its funds in a lot of companies like Nvidia, Tencent, AMD, Nintendo, Activision Blizzard, EA Sports, and many more. Nvidia invented the graphic processing units used in many computers today, and it's diversified in gaming, professional visualization, data centers, automotive automation, and artificial intelligence. Specifically for gaming, Nvidia provides ray tracing to enhance game graphics to the highest level possible. Pixel color specifically calculated by computation and 3D simulation. Their biggest competitor is AMD, which also makes processors for performance improvement as well. Serving markets for PC, gaming, and data, AMD has been slowly eating market share from giants like Nvidia and Intel. AMD's new GPU will be powering the upcoming PlayStation 5, as well as Xbox Series X. The company is small, but they're focusing on growth and scaling, and they're repositioning themselves to offer higher-end products too. Take-Two Interactive is the company behind studios like Rockstar Games for Grand Theft Auto and Red Dead Redemption, as well as 2K for their sports series. The GTA series has been really successful because of interesting storylines and heavy monetization of GTA Online. Many hidden projects are in development, but the company is always consistently rolling out games. And that's a wrap for today's watch list. I really hope you enjoyed the interesting combination of gaming stocks I talked about. Because in the end, every product is a result of a business, and every business thrives as a result of their consumers, which are you and I. You can choose to be just a consumer, or you can invest in the products you use as well. Thank you for watching, and I'll see you next time.